Hello, today we're going to talk about Beyond Meat and then Zoom. They're up quite a bit, putting it whatever, modestly. um, my reactions to it, my thoughts and opinions on Beyond Meat and Zoom. Um, these are one of these companies. I put them on my watch list, and I was watching them and basically watching them keep going up. I never actually bought them or really recommended them unless somebody knew 100% about it. And more than I did, I always wait for the numbers to come out, wait for just so I could do more research on it. Really, that's what I do. I never jump into anything too quickly. But I do put things on my watch list and then kind of watch it, learn from it, and kind of see where it's going, what it does, and basically I'm going to give my final, well, maybe not my final opinion on it, but my a reaction to it going up a lot. And the quarter and everything, both of them had a great quarter, or they put up really great numbers. Beyond Meat, I could talk about it first. It basically the revenue is growing. Over 100%. I believe it will eventually slow down. It can't just keep growing at that pace forever. These stocks definitely have a high valuation. Beyond Meat is around, well, at the time of this filming, it might have went up, it might have went down, around $9 billion for the whole company, which at the IPO, and it's funny, at the IPO, I think this stock was heavily undervalued. I mean, for what it was, I mean, it was almost valued pre IPO before it jumped up and all these they got in on. But it was almost around I think it was like 1.5 billion or something. I was looking at it, and so that was just way too cheap, really. So that's why that's why this whole stock kind of bumped up. I believe it's around maybe 8 billion. If it was really fair value or something like that, I'm looking at maybe 8 billion, maybe 7 billion. I mean, that'd be a really kind of a good buy. I've seen, the valuation is basically nosebleed. It's about almost as high as you can get, but I think it's a great company. I'm not saying I recommend it here. I mean, this is basically a high risk, or I always let these things cool off, because what happens is people start profit taking. I mean, really what happened in all of these things, people were shorting the stock, putting down the stock, saying it's going to crash. And, and really that's never really the case with a lot of these stocks. And basically what happens is it's just shorts. They basically short it, so they basically bet it against it. Then they can't, they have to cover their shorts, and they have to buy the stock back. Maybe excuse me. Maybe I could make a whole video on what short squeezes are and what happens. And basically that's Beyond Meat. I think it's a great company. I think it does great things. I like what it does. It's kind of a growing industry, I mean, people are going more plant-based meats and really more healthier choices too. These things are a lot healthier for you. So essentially, I believe it'll keep going. So essentially, if you want to make a small position here, maybe I would understand that. I don't think you'd be crazy to do that. These valuations are quite a bit high, but really not really. I mean, really when these small companies get like this, if it keeps doubling the revenue, the gap would be closed pretty quickly. I mean, it only growing. I mean, $200 million is not really a whole lot when you're the best in the business selling these things. I mean, it has a lot of opportunity. So essentially, that's the thing people have to always think about. Where would the revenue maybe? Because a lot of times the stock price always kind of ventures out in 10 years from now. So essentially, if it doubles like that, well, it'll be quite a bit. I mean, the sales be over 1 billion, 2 billion, 10 billion sales. So essentially, that it could be, then if it just sits at the $9 billion thing, revenue is only up about maybe 9 or so. So essentially, it's really not that big of a valuation if you look at through that perspective. But a lot of people don't. They look at these numbers and they don't really understand the numbers for really what they're telling you. But anyway, now the next stock is Zoom. First, it's a what it does is like videos and stuff like that. You can kind of video chat, and it does that. I think it's a great company. I think it does great things. I think this one is slightly more expensive. The PE ratio over a quick glance, you would look at it, it would be over 7,000. It was a PE ratio. It's probably one of the highest ones I've ever seen. But the other thing is, it is profitable at that being so small. So essentially, a lot of these companies that only with a $200 million in sales, usually they're not even profitable. So essentially, that's what you have to look at there too. So it is a good sign that it is profitable. A lot of these companies that make that much money and growing this fast are usually not profitable, especially a tech company. So, I mean, it just shows you kind of the profit margins they go have. So essentially, this stock was definitely on the watch. Actually, this stock was on the watch list before Beyond Meat. It's because I think this is one of the best companies in that area, that space. Other than, I forget exactly. I don't think they own Skype, but I mean, I think Skype is the only one. And maybe some Facebook type stuff. But, I mean, this is probably the best in the business when it comes to video. Basically, you can talk to people on videos, which is awesome. I like that a lot. He basically brings people closer, so essentially people like that. So essentially it could do well. I mean, it does have very high valuations, but the revenue is growing. I think it could be $500 million in sales by the end of, it was next year or so. So essentially, and the company's worth around, I think, about 27. So essentially, I mean, it has let's say if it keeps growing at that pace, it would hit $1 billion in 2021, and then it would have about 20 times in revenue if it kept the same valuation. So essentially, that's how you always have to look at it. You always have to kind of see the growth rate, expand it out for about 10 years, and then really some of these valuations don't look that bad if the stock price stayed the same and you kind of bring it back. So, and you do that with really earnings, and that's how we're actually free cash flow, and that's actually how you evaluate them. But anyway, I feel like these companies are great. I wouldn't call you crazy if you bought them. I wish I would have bought them, maybe one of things, but I don't really chase or anything. I just kind of sit back because I always wait for a pullback, and I always think you always get one. So, but I believe in these companies. I'm not 100% recommend buying them, but when it's pulled back, maybe I can make a video and recommend buying them. But other than that, thank you for watching. Bye.